Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the silver outlook still remains bearish. After 8 consecutive days, the market is still looking towards this level of $16.60. Currently trading at $16.68, a break beneath this level would give further scope to the downside and bring in a target of $16.30 and reassess from there. Any advances on the day should find resistance minor at $16.85, however firmer from $17.15 to $45. Looking ahead to gold, the market is still holding to a negative bias and at this stage is temporarily holding at 1,248. However, we could see stops triggered if this level is breached today and bringing a target of 1242 with a base now seen at 1230 to 38, which I can highlight just here. Any advances on the day may find resistance temporarily at 58, but looking above there, firmer resistance at 1266. The Australian dollar is attempting to stage further upside potential here. As you can see, the market is pressuring the resistance at 76.35. Now it is viewed that because the MACD is not fully supportive to a negative bias, could see a stop loss trigger above 76.35 and look towards 76.60 with the firmer cap seen at 77 cents. Now, in light of the current pattern, I still anticipate that the sellers or supply will continue from 35 and eventually wear the support to the downside, which comes in now at 75.65 with the trigger level still holding at 75.0515 and reassess from there. Well, the euro-dollar exchange blows against its rival of the US dollar over the last week. Mainly driven by mixed speculation from the Fed's stance on monetary policy. However, what is noted that the fact is the market did clearly reject the highs of last week of 112.80 figure with a high being 94. Now, although we may see a minor impulse to the upside, resistance is seen now at 112.30 and I do expect to see any advances beyond there to fail, with the overall outlook for the start of this week looking towards 110.70. Well, the dollar yen case did rally on to its target of 111.4565 after reaching a short-term peak at 111.40 on Friday before displaying a reversal and now back underneath the 111 handle. For the start of this week, a break above 111.15 would give further implications towards the upside. Now, a break above this trigger level of 111.4565 would give further scope towards 112.50. But that being said, I'm not overly negative, purely for the fact is that these indicators are slightly on the bullish case. So any dips now see support from 110.35 or firmer from a base now from 109.60. And to wrap up with the Great British Pound, well, as you can see, the market is still trading in a consolidated pattern and still holding from the resistance of 128.1025. It is viewed that further risk into this week should still play to the bear side and look towards a target of 126.90 or lower down towards the bull camp of 126.35 and reassess from there. Any advances should find a cap around that 128.1025. So that wraps me up for today. Thank you very much for joining me and I hope you have a great start to the week.